What's up, guys? So, welcome to day four. So today we'll be talking about entries, exits, and position sizing. How do we actually size up based on our account? All right. So before we start, there's only three outcomes in trading. All right. So the first one will be obviously take profits. I think all of you are very aware of this. Stop loss, and of course break even as well. So in rare cases, we actually use break even into our system. Most of the cases, it's only because we want to manage risk when we have too many trades ongoing in our portfolio and we want to manage the risk. Then we will change our stop loss to break even. But I'll talk about this later in the video. But today we'll be focusing on how do we set our TP and SL. And I want you guys to focus on stop loss because when it comes to trading, a lot of people think that taking profits is the most important thing. But in fact, the most important thing is actually stop loss. Because if you can manage your losses accordingly, let's say if you keep your losses at a very minimal level, then definitely you will make money from the markets. All right. So with that being said, let's go down and let's talk about how do we set our stop loss. So this is one of the tools in TradingView. So I'll go through how do we actually set up all these things in TradingView after this. But I just want to give you a visual representation of what is this. So if you can see, the red color box represents the risk, and the green color box represents the reward. So visually we can always see that the size of the green box is always twice of the red box. This is always one times, this is always two times. This is always because the TP is always 2x, which is two times of the stop loss, which also means we always target a minimum of 1 to 2 in terms of the ratio. All right, so this is just to give you guys an understanding of what is this. Right, so first off, let's go and start with position sizing. How do we actually size our position when it comes to a stock? All right. So assuming that you are starting an account size of $5,000, and the ideal cases we always want to do is that we want to risk 1% of the account, meaning that every time we lose, we only lose 1% of the account. So if you have a 5,000 account and you're risking only 1%, you are risking essentially $50 per trade, right? That's very straightforward. So let's assume that this is stock A. Okay, this is stock A. So for stock A, it's the starting price is around $130, and you want to enter this position. And let's say you know that the stop loss is $120. You know that the stop loss, you want to stop out if this trade hits $120. So the range of your stop loss is actually $10, right? 130 minus 120. So this is range. So obviously your TP has to be twice of your stop loss. That's why it's $20. That's how we know that the profit is 150 because 130 plus 20 is 150, right? So in this case, your stop loss, your entry minus your stop loss is the difference. You get this $10. And you know that you are risking $50 per trade. So $50 divided by difference, the stop loss range, it'll give you 5. So for this stock, if you have this account size of $5,000, what you want to do is that you only want to risk $50 per trade. And for this specific trade, if you are risking $50 and the stop loss range is $10, means that you only enter five. You buy 5 of these stock A in terms of the quantity. So I just want to let you understand how do you actually calculate this. This is a very basic calculation, and there's actually a simpler method. So if I hop onto TradingView, let me just show you, right? So if I hop onto TradingView, what I'll do, let's say, let me go to Intel, right? I like to use Intel as an example because this is one of the trades that I have been using. I mean, I've been in the trade for. So let's do this example, right? So let's say I enter let's just ignore this for a second. Let's say I enter Intel here, right? I'll just go to this one. Look at my mouse over here. I'll go and click uh this thing, long position, because I want to enter a long. And once I click that, let's say I enter right here. You pop up this green and red box. So what I will do, let's say I know my stop loss is like below the EMA 20. I'll teach you guys how to calculate the stop loss after this, but let's say it's just right here, right? So we'll know, it'll show you the risk reward right here. So 1.3. So at least we need a 2. So if you drag this upwards, there's a 2. So we know that if you risk this much in this trade, we need to at least a two times of the reward, is around this price. And then we can double click this, and let's say your account size is $5,000. You change to $5,000, and you only risking 1%. You can change that to percentage. So you're risking 1%. Then, if you know your exact stop loss level, you can key in right here your profit level, your entry price. Let's say this is the correct thing. So this you what you need exactly is 43 stocks of Intel. You need to buy 43 Intel stocks. That's what I'm trying to say. Yeah. So it's very simple. You don't need to do all the calculation yourself. You can just key in everything here. It will calculate everything for you. And if you want to go for short, obviously there's another short option right here. You can just click on that. But in this case, you'll just use the long one as an example, right? So that's basically what it is for position sizing. I would recommend only to risk 1% and 2% if you know what you're doing. But 1% is a good gauge of where you should start. All right. So for entries, let's see. So I just want to remind you guys that we are always trading on a 1 hour time frame, right? Back in all my videos, I've talked about we only trade on a 1 hour time frame. So 1 hour time frame, what it means is that upon market opens, let's say this is 9:30, right? 9:30. So we only trade the first bar 9:30. For this bar to be fully formed in a 1 hour time frame, it means that only at 10:30 this bar will be fully formed. So what it means is that we will only start to look at stocks from 10:15 onwards. This is Malaysian time, right? Of 10:15 to 10:30 onwards. This is our entry window. Anytime before the 10:15, we will not enter any trades, right? Okay, so upon we know that this is the time frame we are looking for. We know that the time that we enter a trade is 10:15 to 10:30, and then the next thing we've got to do is that we got to assess all the confluences, all the rules that we have taught. We have learned for the past videos. So is the stock above or below the EMA? If we are long buyers, obviously you want it to be above, right? So is there a trend line breakout? So obviously, you guys know that we trade breakout. So this is a very clear example of a breakout. So in this case, yes, we do have a trendline breakout. So is the breakout candle the body to wick ratio? So we want a 75 to 100% body candle. What it means is this is the body, you guys have learned that, and this is the wick. So we want at least a 75% body candle to represent that there is momentum. So is the relative volume big enough? We have talked about this in the last video. So at least a minimum of 2. Ideally, we want 3. So yes, in this case, it is. So is the RS, the relative strength line, blue or pink? If it's long, we want it to be blue for the past 10 days. If it's pink, we want it to be short for the past 10 days. So just a very gentle reminder that for the RS line, we always go to the daily time frame to read the RS line. Then we only do this when we have all the confluences ticked, and then we want to check for the relative strength. So for all other tickers, we will look at it in a 1 hour time frame. Only for the relative strength line, we'll look at the daily time frame, right? So is the base more than 10 days? Meaning when you draw the trend line, there are many candles, right? Are there 10 days worth of candle covered by the trend line? So in this case, if you click on shift and you click your mouse, left click, then you just drag over, it shows you, as you can see right here, there's 27 days worth of candle. So we need a minimum of 10 days, 10 days worth of candle to identify it as a good trade, right? So in this case, it's all yes. That's why we enter the stock, obviously. So that's basically how we enter a stock. We do these 3 steps, and then basically we will know whether it is a good stock to trade. So it's very simple, very straightforward. I think it's pretty clear. Right. So now for the exits, how do we know where to put our stop loss? So before we actually do that, I just want you guys to go to TradingView to go to this indicator called ATR, average true range. What ATR tells you is that it tells you what is the range that the stock will move within a day. So just go to the TradingView. you click the indicator section. I'll go through with you one time after this. Then you type ATR. What you're going to do is that you want to change the time frame to 4 hours right here. So this is just using the 4 hours average true range. Um, so basically, what we're going to do is that, so ATR is on the bottom left right here. Let me just delete that and let me just go through one time with you guys. So if I type in average true range, you pop this right out. You pop down on the bottom left. So I want to click on this and press settings. So I want to change the time frame to 4 hours. All right. You guys can just do this and then save as default. So it always will become this setting. Okay. So we will have a number on the left here. As you can see, if I point here to this number, it's roughly, it says 0.53, right? Okay, so it tells us that Intel will move at least 53 cents in a day. So what we want to do is that we want to, this is exactly the Intel example. In this case, it's 0.47. Let's just use this so it avoids any confusion. So the breakout candle and the trend line, there is an intersection point. So it's this point. Obviously, I've marked that up for you. So we want to take the intersection point, this number, minus the ATR. That will give us our stop loss level. So in this case, the intersection point is obviously $24.72 minus the ATR, which is 0.47. I round it up. So as you can see, the stop loss level is $24.25. So we know where should we put our stop loss. So we can just do the what do you call that, long position box, the red and green box. Then we'll know where's our take profit. So I'll go through one time with you on this. So let's say one more time. This is the numbers, right? So let's say I will click on this long position. I'll just click anywhere. All right, just click anywhere. Then I'll double click this. Okay, so $5,000. We're risking 1%. The entry price is, let's say, is here, right? What's this price? So we want the entry price to be at this point right here, because we know that when the bar closes, the entry point is actually here. So let's go back to this again. Double click this. So the entry price we know is at this price exactly here, $25.10. The stop loss, we already know that it's $24.25. So if you click that and press OK, we know that stop loss level is right here. So all we can do is that we just drag our green box to its 2R. You can see the risk reward is 2 right here. Then we'll know that this is our target profit level. So we need the price to hit at this level to make money. And we also know that the quantity we need to buy is actually 58 Intel stocks we need to buy. So it's that simple, guys. Position sizing is that simple. It's not super complicated. Everything is very straightforward. So this is how I would increase or decrease my position sizing based on what I want to enter. Okay, so moving up next, I'm just going to share with you because a lot of you are asking as well, how do I actually choose and pick a stocks, because there are more than how many thousands of stocks. So what I do is that I'll go to the bottom right, as you can see right here. There is this button called screener. So I'll just click on that, click on screener, and then I'm gonna show you these are my criterias. So you can just add on these onto your screeners as well, and just save it. So the first thing I want to do is that I want to put the market cap to be bigger than $2 billion. And one of the reasons for that is because $2 billion, I will know that it's a small cap. So basically, stocks, right? There's this thing called market cap. So there's a small market cap, mid market cap, large, mega cap. So I want to do is that I want to ensure it is at least a small cap stock. I don't want it to be a penny stock, because penny stocks are easily manipulated. So I want it to be at least 2 billion and above. The second one is actually beta. So what beta actually means is that if beta equals to 1, it means that the stock itself is as volatile as the market. But as a momentum trader, I want it to be more volatile than the market. So I want it to be bigger than 1. So it can be big. You can set it to be bigger than 1, 1.5, 2, and so on and so forth. But for me, I'll just put it bigger than 1 because that is my criteria that suits my strategy. Um, for price times volume per month, what this means is that I want to ensure that the stock that I pick and I trade, I want it to have very high transactional volume. So means that a lot of open interest, there are a lot of people trading the stock. This will ensure two things. One thing is that I will know that there is liquidity in the stock I trade, which means that the spread is low. Spread is the price between the bid and the ask. The spread is low. So if you don't understand, you can just look down on Google. But this is one of the criteria that I want to include in my screening. So bigger than 900 million turnover per month. And the fourth one is actually SMA 200. So I want a stock. If I want to long a stock, right, I want it to be above the price, the price of the stock to be above SMA 200 on a daily. So it's a daily simple moving average 200. I want it to be above. So this will ensure that the stock is actually on a major uptrend. And lastly, I want my average daily range to be bigger than 2. So what it means is that the stock will move at least percent from the opening of the stock price. Either up or down, doesn't matter, but it'll move 2%. So because as I said, I'm a momentum trader, I like momentum. I want something that is more volatile so it can hit my stop loss or take profit either way. So this essentially can save this up. So what I do is that, as you can see, once you key in all these criteria, there is 117 symbols, means that there are 117 stocks that fit my criteria. So if I refresh it, it's still the same. So what I'm gonna do, how do I actually draw all this? For example, let me give you an example what I do on a weekly. Normally I do this 2 to 3 times a week. I'll just screen through the stocks and let's say I click Salesforce, right? So Salesforce, this is today, right? This is on Friday. Today is gonna open on the 13th of October. I saw a trend line that I can draw. I can draw from this to here. This because this is a very obvious downtrend because it's below the EMA. Is EMA 20. It's not the best because it's been chopping over the EMA 20. It's not the best stock, but I will try my best to just draw for every stocks on these. So and it's a very, as you can see, the market structure is quite apparent. So there's a low, there's a lower high, lower low, lower high, lower low. So we know that this is in a downtrend, right? So what I do is that the best way to draw a trend line is that once I draw this trend line, I'll do is that I'll just right click the trend line. I'll click edit alert and I'll put alert save. So what that does, right, is that it will give me an alert or notification once the price goes through, touches my trend line. So it will pop up right here, as you can see here. So alerts. It'll pop out and tell you which stock has touches your trend line. So it's very easy for me because I don't need to go through the 170 stocks during live markets. What I do is that at 10 o'clock or 10:15, I will just go to my alert section and I'll see which stocks has touched the trend line. Then I'll just go through and then I'll assess it based on the criteria, the confluences that we just discussed. I'll just go through everything and see which one is the best. I'll cherry pick. So it's like picking the present, like there are like, let's say 10 stocks hit your alert, just pick 2 to 3 stocks and then you find it very comfortable, very confident. Then you enter it based on the criteria. So with that being said, it's very simple. You don't have to go through this every single day because the price is not going to, because we're on a 1 hour time frame. So it's not going to like move drastically or change drastically every day. But I'll just do this like 2 times a week or 3 times a week. Normally I do this on the weekend and then in the middle of the week, let's say Wednesday, I'll just do it one more time. So it gives me more opportunity as well. So it's I think I pretty much concluded everything that you need to know in order to start trading with demo account. I would strongly encourage everyone who is starting out to go with demo account first, to try it, to try all the technical setups, to try how to navigate through all these different new software that you're not familiar with. Use the demo account. Try to demo trade for at least 3 months and journal all your data. Just let me know if you guys will appreciate a template journal. How do you actually track all your data, like the ones I've been posting on Instagram as well? So once you do that and you're profitable for 3 months, then switch to a live account. And then the live account has to be as small as possible for the capital. Don't put in a lot of money. All right. So you need to be consistent every single month, then slowly bump up your capital. Then you'll start making good money. and you don't need to risk a lot of money to make a lot of money. Let me just share with you after in the next few videos as well. I don't want this video to be too long. I want this to be more so on the entry exits, position sizing, including the screener as well. All right. So with that being said, I hope this part 4 video helped you guys in terms of how do you actually enter and exit. And I'll see you guys in the next one. Cheers, guys.